Okay, cool. Let's get started. I think everyone more or less is here. So, uh, let's just see in the chat what's going on. Everyone can hear, right? People are saying no sound.
All good, bro.
Yeah, we can hear you. Can you hear me?
Yeah, okay, cool. All right, let's get started then. Okay, nice. So, oh shit. Clear this. Clear all drawings. Cool. All right, let's get started. So, this call, we are going to go over this week's PA like I do. I'm going to do basically my end of day, but do it live on the call. We'll touch upon certain points in terms of like what happened in PA, why certain trades were taken, invalidation, validation points, when to take a trade, when not to. More importantly, understanding probabilities as well as understanding when it comes to trading and trading with data, it's not about using the data to write the story. You're using the data to tell the story. So that's like going to be the main point I'm trying to go over this week is helping people understand that, as well as understanding that with anything, probabilities are at play. None of the models, none of the entry models, the players, whatever, have an 100% strike rate or even the analysis. Nothing says 100%. So just because you have data and you have an edge, it doesn't mean it's guaranteed. It means it's likely to be in your favor, but you have to accept that it could not, and you have to just accept that. I mean, at the end of the day, the data gives you an edge and it allows you to take a calculated risk. Risk meaning there's still risk that you can lose your capital. And any trade you take, our job as risk managers is to manage that risk and take the trades that mitigate that risk as much as possible. So with that being said, you need to have that in your mindset before you even get to the charts. Nothing is guaranteed. Just wanted to start off with that point. And then as I get my end of day, you'll see why I'm saying this. So everybody ready?
Yep.
We will go over EU and GU. So I will go over which one first? I'll go over EU first. So, okay, what was my intention for this week? So I said at the very beginning of the week, I'm not interested in shorting until it hit ideally this POI, but there was a reason why I said this POI. Because the main thing for me was I was looking at the dollar because at the end of the day, the dollar was going to dictate the moves in EU and GU. And the issue that we had in the DXY was come Monday, we had, if I make this bigger, we had this giant imbalance that we had to deal with. And then if you're looking at it from a structural perspective on the 4 hour or even on the daily, the last point before this major structure break that didn't get mitigated was here, this candle. So taking that all into account, I'm expecting a bullish dollar for the following reasons. So from a fundamental macro perspective, there's dollar demand in terms of like the way the dollar sentiment is, but also the way I saw it was when you've got something like, let's say, an interest rate decision or Powell speaking or whatever, hawkish and dovish tone can change the narrative pretty quickly and then the markets can react. But when you've got something like a catalyst, like war at play, like I said, as crude as it is, you can't unkill people. So whatever the sentiment from a macro perspective that's dictated by war is, if it's live and present, it's not going to go away anytime soon. So with that being said, it's like a question of like, okay, if the dollar is bullish and to go long, where would it go long from? Which aligned with this POI, which also when you go down to the 4 hour or even the hour, which is one of my favorite time frames, you can see it aligns with the fact that we had to deal with this imbalance. This could be classified as inducement, and this is where you want to trade long from. Which is why I said, okay, if that's the case, and this is likely to happen, on EU and GU, I can't go short yet because the dollar is going to show weakness first, meaning that the GU and EU have to be bullish first. So the question is, relatively speaking, where this on the dollar is the likely place to go long in the long term from, where would I want to go short in the long term from? And I've got the equivalent here, which is why I said on Monday in the chats, I'm not looking to short yet. I'll look to short. I've got a bearish bias, but I'm looking to short from here because you have this imbalance and potentially the last up move before this break of structure, like either this break or this break, the last up move is this. So I'm looking to mitigate this overall daily supply, knowing that I've got an imbalance as an additional confluence for us to come in and fill. So that was my high time frame idea for I was expecting this to happen. Therefore, I'm looking for shorts. But in the short term, I was looking for buys, which is why I was looking for a buy on Monday to get to this point on EU and GU. And then when this happened, I looked to short. So that explains my bias for the week and why I have short bias for the week. Does that make sense so far? There's some feedback in the chat. Okay, so you guys know my thought process behind why I wanted to short this week. So the question is like, okay, how did I execute? So like I said, where are we? Let's start EU first because I have the data to hand. So what do we have when we get into Monday? So previous New York low, respected, previous New York. So this is the last previous New York for me. I'm looking at where is the chain because I trade PTLR. So I'm looking for a chain to trade off, either a supply chain, a demand chain, or a flip zone. I have my chain. If I go down to the 15-minute, make this clearer. New York order flow, which is a confluence I have. It doesn't dictate everything, but it's a very strong confluence. The previous New Yorks are being respected. So for me, that's additional confirmation that I know we're still bullish for now, which is in line with what I'm trying to do. Because I'm not interested in shorting, like I said, until all the way up here. So that being said, I'm marking out previous New York lows as well as previous liquidity POIs. Now, the question that came up this week was, how am I determining a previous previous liquidity POI, like or liquidity POI in general? So what is liquidity POI to me? I have a very simple rule. It may sound funny, it may sound crude, but it is what it is. I look for the local sucker, or otherwise known as the local victim. So I'm looking for a place where somebody can think, oh, we're going short, and then they get faked out. Because then I know there's commitment to that being a liquidity POI and people will be bought in. So for example, if someone said this was a supply chain, for example, if I drew it like this, and this was your reaction, and then it broke like that, some SMC people will try and short this and get clapped. Good. Now I've figured out the local sucker. So I know that this is a legit liquidity POI now, because this was manipulation to convince these guys to put a limit here. Like this, most likely, if they were trading low time frame, whatever. And then it got suckered out. So I know now they need to mitigate this. So this, and this liquidated that. So this is a protected low. So now I'm interested in trading this. Does that make sense so far in terms of how I identify liquidity POI? In general, my principle is, and remember this, Find the local victim, find the local sucker. When you find the sucker, you are fine. If you don't find the sucker, you will be the sucker.
Sorry, I'm just confused as to how that week is the local soccer, just like
At this point, you have, let's say, a chock, and you'd say on the other side that this is your supply chain forming, whatever.
right.
So up until this point, even a bit further back, I can do that. Up until this point, if I drop this down even one more time frame, this thing you're going to say SMC style is your chock. You're going to say that's a chock, that's your reaction. I'm going to short this,
Yeah.
and then this is the weak low you're looking to target.
Mm-hmm.
Swept liquidity here, so you can
Right.
say, oh, they're in control, and
Right.
then that's not what ends up happening. Therefore, anybody who believes that now is a sucker, and this is the protected low.
Right.
And in line with my other confluence, New York to New York, the last low of New York, if we're bullish, should be protected, which it ends up being.
Mm-hmm.
So I got all my confluences in line. I found my sucker. I know my liquidity POI, and I know it's a previous New York session. And what I'm expecting, if a bullish order flow, like here and here and here, is basically a retracement back to New York, a retracement back to New York, a retracement back to New York. So I already know from the jump, before I've done anything, I'm looking for this. Because I'm just expecting a retracement back to New York for us to continue bullish. Because like I said, I'm not looking to short until we get here. So my TP, if I'm going long, is this. Because like I said, I'm not interested in shorting any of this. This is already efficient and we're still carrying on bullish. And with the DXY having this giant imbalance, like I said, and on the higher time frame here, us having the same imbalance. So let's do that. Make it clearer for everyone to see. So we have imbalance that we need to fill. One. So rule number one, trade towards the money. An imbalance is a draw in liquidity. So that counts as trading towards the money. But more importantly, we've got equal highs just before that over here. Relatively equal highs. Second reason to what? Trade towards the money. Because this ends up being a giant liquidity zone. Everyone understand so far?
Yeah.
Okay, so I'm going to continue. So let's move the chat out of the way so I can see what I'm doing. All right, so now that I know what I'm doing, Monday, my bias is bullish. And all I'm looking for now is PTLR. Yeah, so Monday comes. I am already expecting a retracement to this level. This is my overall invalidation point for this particular concept, right? So all three entry models presented themselves today. So if you had your confidence and everything in order, like you were spoiled for how to get in. And I'll show you all three entry models. So first one, if you were to see this as equal to, and keep in mind, I don't trade anything, and I keep saying this rule, until Asia has shown a commitment to expanding one way or another, I'm not taking a trade because I'm not trying to guess which side of Asia is going to get taken. I'm not trying to guess, is it a day where we're going to get low down liquidity, meaning one side, and then you know the probability of the other side. I'm not trying to guess that. Like, there's no point trying to guess that. We know what the odds are. So I'm going to let price action do its thing and let data tell the story, not write the story. So I'm waiting. I'm chilling, just waiting for my sessions to start. I start trading from 7 onwards. But I'm on the charts before that and I'm watching what Asia's doing. What do I see? I see liquidity. So where is it? This one. Like this. Price of liquidity. Do I see equal highs? Yes, I do. That's nice. That's what I want to see, because what does that mean? Liquidity zone. So I can trade towards the money. So back to my framework. Let's break it down in steps. P, I have my chain, demand chain, place to trade from, point of interest. So P is covered. Where is it? Demand chain. Next, is it a liquidity POI? Great, even better. So I've got double confluences for why my point of interest is solid. So let's put that over there. So now, what am I waiting for? Prices happen. I'm waiting for this to hit here at the right time, because what I'm trying to play, if we rewind relative to the actual day itself. It's that candle, where is it? There we go. I'm trying to play, geez, that's a big candle. I'm trying to play this trade every day. My goal as a day trader is to get in as close to this as possible, relative is as in the daily candle, and exit here. If I can do this, I am the best day trader in the world. I did my job. Nobody got a better trade than me. No matter what you say, what you think, I got the best trade. Not disputable, fact, right? This is the best possible trade you can get in a day. Mind you, it's difficult to execute, but that is my goal. I want to get as much of the daily move as possible. Everyone's still with me?
So what's that candle called?
It's a daily candle.
Okay. Is that like an indicator?
Yeah, this is the power 3 indicator, but the concept is the same. This is just what the daily candle looks like.
Oh, I see.
So, okay, with that being said, what are we trying to identify now? When this occurs, which is the daily low. So this is where the data comes into play. The extremes of the daily candle. So if you're in a bullish scenario, the daily low occurs in what we call a session kill zone. All a session kill zone is the window of time where it's the highest probable time to find this. If we can find this, which is the extreme or the daily low, you can play reversals. Because as we all know, especially a lot of ex-phantom in here, we play from the extremes when looking for a reversal. So you can't look for a reversal if you can't identify the extreme, which is why this is so important. You need time and price to be in harmony and in sync for you to take a highly probable reversal setup. Otherwise, you'll be looking for reversals in stupid places and getting destroyed. Because at the end of the day, if you look at a daily candle, there's two extremes. So realistically, you've only got two shots that are pure reversal, here and here. Everything else, relatively speaking, in the middle of a candle is a continuation, which is why when it comes to my trading for me is very simple. I trade 95% of the time, two particular setups. So these are basically the entry models I use. EM1, which is a reversal entry model, and EM2 and EM3 are basically variations of continuations. But if you look at them in more detail, this is just a retracement leg. And this is also. So I've simplified these two to just come up with just trading the Fibonacci, as long as it's from a liquidity POI. So I only really have two entry models 95% of the time, barring lunch money, which we'll cover right now on this call. But my trading is very simple, because a trade can only be one of two things. It's either going to be a reversal or a continuation, which means a fib will be relevant. Like I said, if you take this as a continuation, fib is relevant. If you take this as a reversal, which I'm about to show you, you use the reversal setup. It can't be anything else. It can only be two things. So you only need two entry models. Keep trading simple. All right. Everybody with me now so far, before I get into how to actually get in now? Okay, right. So we know what we're trying to do. Now the question is, how do we do it? And how do we use the data to get involved in a highly probable way where you know the stats are in your favor? So this is what I'm going to teach you now. So we are now looking for this to occur. So this is where the data comes in. PTLR stands for price, time, range, and liquidity. Price and POI has been covered because we know we wanted to trade from here. We're now looking for this to occur at the right time, meaning the extreme. Like I said, it's relevant to session kill zones. So when we look at the session kill zone data itself, which I will get for you here, we're looking for a bullish day and we're looking for the highest probable time to find the low of the day. And you can see here clearly, between 7 and 9 are your hotspot hours for when this is going to occur. So you're expecting it to occur here. We get the extreme print 7 on the dot, which is in line with what we'd expect. Frankfurt Open. That doesn't mean, oh yeah, 100%, etc., because it's not been confirmed yet. But you have the confidence to say that, okay, I know why this is here. I have, relatively speaking, like one real calculated risk entry model, which is known as lunch money, which let me just cover first, because like I said, all 3 entry models I use were relevant here. So what is the criteria for lunch money? So all lunch money is, I think I have it here, let me check. In terms of, no, I'll get it open, there we go. So all lunch money is one of my setups in my dynamic risk strategy where I risk a bit less, but it's still a setup for me where it's just a liquidity range. So a liquidity raid is just where you've got something like this, where retail or someone who trades support and resistance will say this is their support, so to speak, and then they'll say they want to put their stop loss here because they've seen bounces and it's a double bottom, whatever they want to call it, don't care. We know there's sell stops here for people that may be a breakout trader. It is what it is. So all we're looking to do is play off that. Now, every day when I start my trading day, I analyze what the Asian range is. So it's 20 pips in this case. And what I have statistics on the Asian range and I use it to play the day. So in regards to that, I mark my forecasting Asian range tool, my standard deviation tool, which is in the tool resources in the Discord chat. So if you haven't seen it or don't know what it is, it's there. But basically, the idea behind the Asian range is, for the lunch money setup, is when you have a sweep of the Asian range or a liquidity area where it can be potentially raided, that the idea is if you get low down liquidity, which is basically the idea of the low of the Asian session being swept, you can get to the other side. But when you do get this kind of sweep and this kind of pattern or play, you know that there's an 80% chance it's not going to reach here and a 96% chance it's not going to reach here based on the data. So with that being said, I can take this entry as a calculated risk entry with no confirmation if I'm expecting it and I've got my other confidences in order, meaning my POIs and etc., to say I can enter here with my stop here and know I can pretty much get 2R guaranteed. Also, understanding the Asian range, meaning I can play off this data. So what is the data around the Asian range? So some of you who are already on the site already know, but I'm going to go over this anyway. So what I tend to do, I wake up, I look at the Asian range, I see 20 pips. I know that this is proportional to the size of the day. Why? Because I've got a data analysis on it. So we're here, 20 pips. I go to my table, I go to the right, and I look, okay, what do I know? One, I know it's the most common range type in terms of it's the most common one I'm going to see. But more importantly, I know, one, it's supposed to be a quarter of the day on an average day of the last 10 years. And two, I know that the percentage chance of both sides being taken is 64%. Key point here, this does not say 100%. This says 64%. So it might not happen, but it's more than likely it will happen. So I have edge because I'm looking to play off this as my edge now. So what does that mean? It means this. So I annotate my chart. I've identified this so far based on the data as London low of the day. This is also Asia low being taken. I know the probability of us to get here is 64% based on what I've just shown you. Asia high taken. So I mark that out. And I put 64% chance. So I know just based on those stats alone, I have a 64% chance of hitting 1R basically with this lunch money setup. So I have edge. This is good. 64% chance of hitting 1R. Barely any drawdown, if any. It's worth me taking as a calculated risk. Keyword, calculated risk. You make the decision yourself. Calculated risk. Nothing is guaranteed in trading. Now, I also told you that this Asian range is supposed to be 1/4 of the day based on the last decade of data for an average day. So I know my day target is the following. 1, 2, 3, 4. That's my potential day target. As a stretch target, if this was like a bigger than average day, I would go to 5 standard deviations based on the fact that the lowest scenario is 5 standard deviations for the day. So you already know TP1, TP2, there they are. So TP1, TP2. So already in my day, I'm planning where to get in, where to get out. Now, before I carry on, anybody, do you not move it to the low of the day? Do I move what to the low of the day? It's basically the low of the day. Like, I mean, what? It's like, what, half a pip? It's like, there's not much point. But I do get what you're saying, Castillo. But yeah, everyone good so far. Yeah, in other situations you move it, but in this situation it's not worth moving because it's literally just there.
Can I ask a question, you? Do you think that it's more probably to take both sides if the low goes first when you have a bullish bias? Meaning in this case, imagine that you have the bullish bias, you expect higher prices, but the high go first. Do you still expect the low to go, or do you take into account that probability?
No, I look at, so like I said, I've got a specific criteria for like when I'm expecting, let's say, Asia to hold versus London. Because keep in mind, overall, you will see Asia play out more being the high of the day than London, like historically, which is over here. So I don't marry that London has to take the high or anything, because statistically, I'm not going to see it the most. Statistically, Asia's supposed to do it. But when it does happen, you have an edge because you now know when you look at them together, it's about 80 to 85%. So if Asia's taken, process of elimination wise, you know London is most likely to be next because it's less likely to be New York. So if you can identify London, you have an edge of 80% now. That's why I like it, but it doesn't mean that I marry the fact that it has to be swept. Like it doesn't.
Okay.
But when it does go there, I can play off it because I know I have an edge. That's all I'm trying to do.
Okay, so if in this case the high goes first, I will not say that you assume that the Asia will hold, but you can start thinking that it might hold if the rest of the confluences check out. Yeah.
I mean, okay, so like make it as like robust as possible, right? There's 5 possible confluences that can tell you when Asia is going to hold. So we've covered them before, but like we'll cover them again, like quickly. So ideally, you want to come from a high time frame POI. Let's just cover this again. So like, for example, this high time frame POI. This is like a monthly level or daily demand level, whatever, for education purposes, right? So the overall move is stemming from a high time frame POI, ideally. You've got efficient chaining of price action, meaning this. There's no inefficiencies here. There's no reason to come back down, right? So I'm giving you the criteria for everything possible to show Asia being the low of the day based on my experience and the data, right? So high time frame POI, check. So let's mark this out. Chain, demand chain, check. So we know who's in control. Now, there's two more aspects of this. There is one, that it has to be a liquidity POI. So itself is a protected low. So we have that here in this scenario, like so. So this is liquidity POI, that's check 3. Check 4, this has to occur in the first 3 hours. Let me explain why. So, where is it? Okay, let's move this here so I can see it. Okay. Let's say, for example, in the bullish scenario, right? For the last 6 years, it's 41.5% chance Asia will be the low of the day. Everyone agrees so far?
Yep.
Right. So let me explain to you why I put so much emphasis on the first 3 hours. So watch. Let's look at the maths of this. 41.51%. This is the same view split by hour, right? So let's get a calculator out. 15.19, 11.85, 5.18 divided by 41.51. Yeah, the total. So I know anytime I'm ever going to see Asia be the low of the day in a bullish scenario, there is an 80% chance basically I'm going to see it in the first 3 hours. This is why I focus on this and I don't get distracted with this stuff. Because it's low probability relative to when I'm going to see it play in Asia. Does that make sense?
Yeah.
Yep.
So we also have more data to even back this up further, right? Watch. So when else are you unlikely to see Asia get swept both sides? When you have the data sitting right in front of you, you know that the probability of Asia being swept both sides is directly proportional to the actual size of the range. Meaning, if you have a big range that is, between, let's say, 30 pips and above, it ends up being 50% or less. So it's a coin flip. So that is your 5th additional confluence. If you had every single confluence possible, those would be your 5. You have, where are we? Shit, where was it? Okay, sorry, over here.
Yeah, it's
High time frame POI, check. Demand chain, check. Liquidity POI, check. First 3 hours of Asia. I'm gonna write it down because it's recorded and people can see this. First 3 hours of kill zone. Now, people are gonna start talking and say, what happened this week? I will get to that, so don't worry, I know what happened this week, and I'll explain how I took the trade and why I took it the way I did. Don't worry, I remember. So, kill zone. Boom, and in this case, small Asian range, but the rest of this trumps the size of the Asian range because, like I said, you've got efficient price action. But if you had to have all 5, you would want to take into account Asia range size. This is your magic 5 confluence checklist for why or when this will be the extreme, meaning the low of the day. That is all you need. That is the highest probability confluence setup to identify this as Asian low of the day. Okay. That covers that one question, right? Everybody happy with that so far? Okay, now I saw also in the messages at some point today, people are wondering, does this matter relative to it's a Monday? So Mondays it always happens. I have the data and I'll show you, and it's not statistically significant enough to play an edge off. And I'll show you the data here. So, this is probably going to break my computer, but I do it for you people, so we're going to do it anyway. So I have the data, and you can see by day, right? This will probably freeze, but we'll see what happens. Okay, is it working? Let's see. Yeah, it's working. Cool. All right, so Monday, 44, 37, 15, over 6 years. I don't care for any individual year. I'm looking at the big picture, right? It's like all over the place. Because like I said, with Mondays, you've got it's 1/5 of the number of days that you have for the year. So your sample size is a lot smaller compared to if you're looking at the big picture. So that's the big picture every day. That's Monday. This is not statistically significant enough for me to take Monday seriously and then play an edge off this. So I don't. You trying to do this is over refinement and analysis paralysis. That's why, one, I'm not going to release this because it's a waste of time. And two, it's not statistically significant for you to suddenly change your trading plan. This is why it's pointless. Tuesday, same thing. Wednesday, basically the same thing. Thursday, basically the same thing. Friday, basically the same thing. Get my point? This is pointless, waste of time. Focus on the big picture. That covers the Monday myth. Cool?
So it's generally like whenever like this occur, no matter what day.
This
and
can
that
occur any day. Just
any
focus
day, yeah.
focus on the POI. Take the day out of it because I've just shown you through 6 years of data. It has no edge. It's a waste of your time. Like, don't over refine and try and over refine this and say, okay, it's Monday. I need to be looking for. No, do not do that because there's no data backing it. Like, look again. The data is not that. It's like what? We're comparing Monday to Tuesday. Over 6 years, it went from 44% and 47 for, okay, this case. But like, we're talking 2% in the bearish scenario. Like, it's not gonna make or break your trade idea. So why waste time focusing on it?
Right.
Like, focus on what you're looking at in terms of price action, not 2% over 6 years. So that covers Asian range. Cool? So we can move on to like how we entered this week. We're going to touch upon Asian range again this week, but I just want to like get that kind of education out there so we know not to marry, trying to have data how to have data write stories. Like the main point I'm trying to address in this call is data tells the story. It does not write the story. Okay, let's move on back to this week now that it's covered. Okay, so hope you guys stay with me. So use the Asian range to forecast the two targets, right? TP1, TP2. So going forward in the day, I already know I want to get out here as a daily target, which is in line with my confluence of I want to short from here for the week, right? So how could you get in? So this was your lunch money entry. That one's done. That was a 5-hour trade. Good job. You would have to have balls of steel because, like I said, it's a calculated risk entry with no confirmations. But you have confluences that are price action and data driven to make it make sense. So if you're going to take a risk entry, take a calculated one so it's not a stupid risk. That's what lunch money is. Because there's an 80% chance this will hold. So it's still high probability when you have all your confluences in line, meaning PTLR, price, time, range, time, price, liquidity, here, trade towards the money, range. Range meaning, have you got enough range to hit your TP target with good risk reward, which you do because this is a 5-hour trade. Or a 4-hour trade if you took it out here. more than enough to make money. That's entry model 1. Out of the 3 you have in the project lowdown strategy. Entry 2, LOD reversal, meaning low of day reversal. So, or, the typical smart money reversal, right? What is it? Chalk in a box, basically. Nice and simple. You draw your box, Wyckoff accumulation for the old school SMC traders that are in here. And what are you waiting for? You are looking for the following. You want sweep or 5M chalk down. You want a change of character up, the last high that caused the low. And shout out to my mentor, Mr. Blackwatch. You want to see supply that is in control fail because you want to know who is in control. And you want to know if you're going to long that buyers are in control. And I call where you have the supply chain that Blackwatch graciously invented for all of us to use. I call the break of it the breaker. That's my definition of the breaker. I don't know what the ICT version is, but that's how I define the breaker. Where I see my supply chain break, that is my breaker. Now that I have my breaker, I now know that buyers are in control. So I've identified the low of the day, and I know Asia low is taken. So now all I'm looking for is to get in long now because I know buyers are in control. And I've achieved my objective, which is I am trying to find the long that is as close to the daily bottom wick as possible because I'm trying to play the daily candle, meaning I want this trade. This is the trade I want every day. I'm greedy. I want the whole move. This is the trade I want. So the market is not
Now, I got a question, if you don't mind me asking. Why is that the breaker and not the last point of supply?
wherever floats your boat. This is just what I call it.
Right, but isn't the breaker the last point of supply where the chalk is?
No,
Do you have it marked by them?
I call the breaker where I see the supply chain break. The last place where the supply chain was relevant is here. Where it breaks is here. So this is my breaker. That's how I define it.
Oh, okay. Makes sense. Thank you.
No worries. So, sorry, not the whole range. That's the breaker. Okay, I'm not going to answer that. This question's off. No point. Okay, so how to get in? You can play this either way. You can either look at this as like a continuation or use it as a confluence as to when to get in to cover the low for a reversal. Up to you. Me, if I can get a good stop loss that covers the low, I'm taking this because, like I said, from a statistics perspective, once I've identified this, by the time I get to New York, I know that this over here has an 80% chance of holding. So I have edge, where I know my stop loss is basically bulletproof. So this is my favorite setup because, like I said, I know this has an 80% chance. I've seen my shift in order in structure. So now I can take this long. And where's my target? The same place. Right? TP1, TP2. Now, this low of day reversal, this is where I use my model, so this is entry 2, the entry we're talking about. So far we've covered lunch money, which is over here. Let me make it clearer. This one's lunch money. This one is your LOD reversal. There we go, over here. So now, just because Asian range data is saying it's like if it's an average day of the last 10 years, it should be 4 standard deviations or 5, doesn't mean it's going to get there today. Because keep in mind, Mondays typically, where is it? Somewhere here. Mondays typically on average are the smallest days of the week for the last decade, right? Mondays and Tuesdays are usually your smaller days. And then Wednesday, Thursday are your expansion days, the big days where you expect to get the majority of the weekly range. And then Friday, depending on if you hit your target by the end of the week, can be big or small. So I know that there is a chance that this may not play because it's Monday. Either way, I still need to know realistically what is my chances of hitting 16R with a 6-pip stop loss. Because just because I think this, I'm not going to hold like a dumbass and be like, oh, I have to get this. I want to know the odds of what I'm doing. So this is where the concept that I invented called pip availability came from. So what I do, I get my risk reward tool out. I mark it out like this, covering the low of the day, and I know my entry. So I know I have a 6-pip stop loss. And I'm trying to calculate up until 10R, what is my percentage chance of hitting each of these targets based on the fact it's a Monday and I have a 6-pip stop loss. Because I want to know where should I realistically partial, what is a realistic target, and so on. Right? So what does that mean? So let's drag this across real quick. Everyone can see my screen, yeah? Okay, so let's put this over here so you guys can see what I'm about to do. So what I'm going to do now, make sure this is clear. Okay, cool. I'm going to calculate what is the probability of me hitting 2, 3, 4, 5, 8, and 10R for me to be able to figure out how, like my odds of basically hitting TP. So let's do it. Where's the model? Over here. So 6-pip stop loss. Let's put that in the model. Why is it freezing? Okay, cool. Refresh. What is going on here? Okay, it's because I've got so many things open. Okay, and click on Monday. All right, cool. Let's make sure that's working properly. Right. So over the 10 years, it's telling me on a Monday, 7R is the good target. So it's telling me I should get out at 7R. Right? So given the fact that, like I said, in context of the data, I know where I'm looking to trade from to go short. I'm thinking, okay, maybe perhaps it doesn't get to there on Monday. So I should partial on Monday. So maybe I partial a proportion at 7R based on this. Or if I'm looking at relative to like last year, which is more recent price action, basically everything's above 70%, so I can go for 10. And that's where I look to partial. However, I'm also looking at it relative to, all right, what time is this? Because if we still have range for the day, is likely to continue until you hit what? An optimal exit time. Because we also know, just like we have the kill zones, when the extreme of the candle, this side is going to form, we also have the data for when this is going to form. Today, it formed at 7 o'clock. Look at the data. Bullish day, bullish scenario, 7 o'clock is a hotspot. So not only do we know when and where to get out, we also know what time to get out. So we use these confluences to figure out where is the realistic target. Meaning if we hit, let's say, our daily range at this time, near like an optimal exit time, we might decide to partial heavily because there's no guarantee or why this would happen so late. It's way above ATR and all these other things. But my point is, with the data, we have ways to make informed, calculated decisions on what we want to do. That is edge. That removes guesswork. That gives you an advantage. Does that make sense? So like to finish annotating this chart, because we have it here, and for people who are going to watch this recording later, I'm going to do it. So let's just do it real quick before we move on. Okay, so let's use 2022 because it was recent. All right, so 2R, 100%. So let's just mark it out for the flex because why not? So, boom. Flex on them one time. So you mark out your chart like this, and everyone thinks you're fucking Rain Man. You say, I have a 100% chance of hitting TP if we are bullish. And we know that was pretty much 100% for what? The first three. 2R, 100%, 4R, 100%, 4R, 100%, 5R, 100%, 6R, 100%. So you mark this out and people think you're fucking crazy till it fucking happens, and then you start laughing at them. That's what I did. Because the data does not lie. So you can have all the feelings you want in the world, the data does not lie. Tough shit. 6R, boom, 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 boom. 7R, it gets to what? It's 90.4%. So then you start being humble and you're like, no, okay, 7R is 90%, you know, be a bit careful. This is what you call statistical edge in your trading. Learn it, love it. It is amazing. 10R, 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 10R. 10R, 73.1. 8R was what? 88.5. Okay, I'll mark up these two and that's it. 88.5. R is 70 or 10R, 73.1. All these targets are good in probability perspective, so you are probably not going to look to partial shit until you get to 10R. So that covers that. So boom, there you go. Take it in, take a picture, etc. Cool. So now, if you missed this entry, so we've covered lunch money 1, we've covered the reversal, LOD reversal. If you missed all of them, you still have a chance to hit low down continuation. So this was your second opportunity. If you fucked up here, there's still hope for you, especially if you're a New York trader. So don't worry, New York people, I have you covered too. So how would you get in if you're waiting for New York? This is how. Where is your last liquidity sweep? Up until this point, if you were shorting and you said this was your supply chain, what does this mean? You have found the local sucker. Here, this is a liquidity sweep. This is supposed to be a protected low. This is a liquidity POI. Up until that point, supply chain was active. Everyone thought we're going short. Then they got suckered, and this guy is the sucker. So once you have found the local sucker, you play off the local sucker. You draw your fib, like so. You need it to go into discount. Check. Where do you put your stop loss? The same place every time. This guy. Enter like this. You wait for the candle to close. Why can you wait for the candle to close? Because it's a 5M candle. You have time. Enter like this. 15 pip stop. Okay. Does it have enough range? That is the question here. So you got enough range for 5R, potentially, based on the standard deviations, and you got enough range for 4R. Why would you not take this trade? There's enough range, and you're expecting the optimal exit time to be anywhere between, like, depending on your range, 5 and 7 or 8 o'clock. So it's not too late in the day to take this. There's nothing wrong with this. So I enter after the candle. It's not, you can enter like this with a limit if you wanted to. It's just a personal preference. I If I'm going to go in for a scaling and I'm expecting a New York pullback, I'd rather know what the pullback is to know how to get in than anticipate, oh, it's here or there. I'd rather just know. Because who's to say that New York literally just doesn't do like this shit and then go? It could do that. So I'd rather wait for New York just in case this happens to get a better entry with the same stop loss, to get a better risk reward.
Sorry, I was just gonna say, like sometimes this is the market, right? You don't know when it's gonna stop. Or are you saying like after the last bullish candle closes, or like the last bearish
I'm
candle?
saying I already know as soon as I draw this fib, I know my stop loss is here already. And I know where I want to get out. Like I'm either gonna get out at extension, so like one of these levels, right? Or I'm gonna hold to my idea of 4 standard deviations based on the data. This is my daily target, let's say. So I know where I want to get out. I know when I want to get, and I know where my stop loss has to be for my trade idea to be invalidated. All I don't know is where my entry is at this point. So I can enter like this if I'm happy with getting, let's say, a 2.5 risk reward, or I wait and I say, okay, this candle closes. Am I happy with 4R for this trade idea? Yes. So I wait for this candle to close and I enter. I can afford to wait because it's a 5-minute candle. I'm not in a rush. It's not like it's going to leave me. I can wait for a 5-minute candle to close and hit enter. If it's the 1M, you don't have that luxury because like by the time you react, it could move a little bit and then you get a bad fill. With a 5M candle, you're literally waiting.
Right. So this is just on the preference of you trying to either you want a lower risk
Yeah, I mean,
reward or higher.
I'm here anyway. I'm literally just sitting at the charts. This is my trading session, so I can afford to market execute this. If you're somebody who places limits, then just place a limit on the 50%.
Yeah,
Or
right.
you place a limit on the 61.8, it gets left behind, then you're pissed, then that's your problem.
Right.
Your choice. Like, I'm just giving you the framework for what works. How you execute it is your business. But there's nothing wrong with someone entering with a limit. There's nothing wrong with someone market executing. It's completely up to you and your personality. I personally like to wait for a candle to close, and because I already know where this is and I already know where this is before I've even taken the trade. I'm just trying to figure out what this is in terms of where's my entry and does the risk reward make sense for me. If I'm not happy with 2.5 risk reward, I'm not entering here. If I'm happy with 4, I'll enter here. Up to me. Does that make sense?
Yep.
Okay,
Yo,
so
in regards of like New York traders, I'm a New York trader, and I think I speak for all of those. So there's no there's no way for us to call to get the high of day, right, or low of day if we don't trade. I mean, I'm not saying it's not possible because there's still a little bit of percentage of that happening, but I mean, is this the only way to trade New York from your views?
okay, so let's actually like take the feeling out of it and purely just look at statistics, right? Because that's ultimately going to dictate what you do, because that's where your edge is. So looking at New York by a session perspective, you can only look for a reversal at the extreme. So you know that the extreme is only going to happen in New York over the last 6 years, 17% of the time for the bearish scenario and 18% of the time for the bullish scenario. So 8 times out of 10, you're not going to see a reversal in New York. And furthermore, when you are going to see a reversal happen in New York, it's going to happen either. Let's get some examples out. All right, this is one. What happened? NFP. I don't think you're going to try and play NFP, catching a top and a bottom. So it's even when it does occur, low probability. When does the next one happen? Keep looking. Like I said, it's not common. This is rare, but it counts. But you still wait for a confirmation entry and you can still take what? A continuation. This one, this is a bit messy. This one kind of happens. But as you can see, it's not common. The data says it's not common. Price action, naked charting, it's not common. So you're better off looking for this. Because 80% of the time, you know it's going to be either London or Asia. So you can simply just play a retracement from the extreme. and just take that entry. Because what? It's a retracement. So your fib will always work. And then you take your forecasted low of the day relative to where you entered on in New York. So in this case, like, I don't know, 5 standard deviations, 1, 2, 3, 4, 5, exit, there is your money. What time does this happen? 6 o'clock. What time does the data say to get out? Bearish, hotspots, 6, you get the point. You're better off playing the continuations as a New York trader because statistically it's what you're going to see 8 times out of 10. You're rarely ever gonna get the high of day in New York. So if you want to play reversals, either you wake up early for it or you just take it out of your plan, or your plan should be primarily retracements or continuations, because that's what you're going to see in New York most of the time. 8 times out of 10, you'll see this. 2 times out of 10, you'll see that. So why focus on that when you know you're never going to see it? And if you try and force it, you'll take a lot of losses. That's my advice to a New York trader trading EU and GU, because the statistics say what they say, and we can't change it. They've been the same for 15 years. They're not going to change now.
Got it. Thank you.
Does that cover that? Because that covers all of Monday. That covers all your entry models. You had 3 ways of getting in. For New York traders, you can sometimes, yeah, okay, yeah. Fair, yeah, if you set a limit, maybe. I don't know. What time is Asia in, Jeff, in New York for New York traders? Like, would they be awake or would they be asleep?
Between 8
Yeah, we'll be
p.m.
awake.
No, between 8 p.m. and I think from Eastern Standard Time, 8 p.m. and 1 a.m.
But this is the thing. Even if you were to do that, you're still playing guesswork with, okay, is Asia the high of the day or low of the day? And you don't really know until the session's over. So even then, like, as Jeff says, it's hard. So is it worth it? What's easy? Like, make your life easy. At the end of the day, we're trying to make money. So if this is the easier trade, like, why do you need to force this? If you're so determined to get the low of the day and you know it's going to be hard, then just wake your ass up and then just trade it here. Because you know that this is the highest probability way of finding it is in London. So why make your life hard? Like, if you want the low of the day, tough shit, go get it in London. If you're not willing to wake up for it, you're not gonna get it. Tough shit. Like, the market's not gonna be sorry for you. If you want your sleep, cool, nothing wrong with that. Like, trading is for your lifestyle, right? So then if your lifestyle says you want to sleep, cool. Wake up for New York and then literally go get your continuation. What you're going to see most of the time. Everybody cool with that? Because we're running out of time and there's some stuff that we needed to cover for Wednesday and Thursday and stuff. So I need to get to that. I don't think we're not going to have time for GU. I don't think, but I'll try and cover it quickly. We'll see. But I want to go over the rest of the week.
How do you decide between using momentum entry and reversal? Because sometimes price doesn't come back. So the only way to enter is the momentum.
I'll cover that on
Yeah.
I'm about to get there. So, is this okay for us to move on to Tuesday shorts and stuff? I've covered all the entry models for this day. So this is done.
Sorry, I was gonna ask, the second entry you took in London, is that like an A+ entry or like just also an A entry?
It's an A+ entry. This is my A+ model. This is lowdown liquidity. Asia range, sweep of London. I know the probability I can get to the other side.
Okay.
This is my A+ setup. But like I said, this only happens when there's PTLR. You cannot force lowdown liquidity. If the POI doesn't make sense and it doesn't make sense to sweep Asia, don't force it. Like, I'm taking this relative to a high time frame narrative here. I knew I only wanted to short from here, so I could long into that POI that I wanted for the overall week. Because like I said, my goal as a trader, the way I trade, I'm literally trying to get the weekly move. I'm greedy. I'm trying to get every week, let's go on an hourly time frame, make it easier for people to see. My goal for the week is, ideally, I want this move. I want to enter here, exit here. Enter here, exit here, or enter here and exit here. I want everything. And I have the data confluences to know when this is going to happen, at what time this is going to happen, and where this is going to happen. That's what I'm trying to do every week. I'm trying to get the big move. I'm not interested in 10, 15 pip scalps. I don't give a shit. I want the big move. So let's get to Tuesday because we're running out of time. And Tuesday covers the momentum entry question. So what happened on Tuesday? We took the money. So we've had the sweep that we wanted, and we're at the POI. We filled the imbalance. So now the question is, how do we get involved? So let's move this out the way. Clean up the chart. Fresh pair of eyes on this. So PTLR, P covered. This is your POI, the one that we wanted at the beginning of the week. All we're looking for now is our entry. We are expecting a bearish day. Yeah? So let's break down the PTLR framework here. We've hit our price point, so let's just mark it out for educational purposes more clearly. So you have something like this, call it supply 4 hour, whatever. We know it's an imbalance on a daily level anyway, but let's just, for education purposes, just call it this, whatever. You can see it here. Let's make it clearer for people. This is on the daily. Everyone can see, yeah, you all with me? What? This is our POI. Now, all we're looking for in PTLR is this to be at a certain time. We need liquidity. L equals over there, over here, whichever one you want, it doesn't matter. Asia is 20 pips, go back, data says 20 pips, go right, 4 standard deviations, 64% chance both sides being run. Cool. We draw what? Our Asia forecast tool, standard deviations. We know when we get low down liquidity, which is what? Asia range gets swept up. 80% chance not getting here, 96% chance not getting here. So for my breaker model that everyone seems to love so much, what do I need to see? I am going to tell you. So let's move. Okay, how am I going to do this? Can I get a better liquidity POI? Okay, cool. Let's say this is the trade towards the money, right? This is better. Cool. This looks nicer. So, boom, boom, boom. Trade towards the money. All right. What do we get here? We are looking for PTLR prices here. We are looking for chalk in a box. Distribution, because we're selling. Wyckoff distribution is what we're looking for. Blackwatch style, what are we looking for? I want to see demand fail. So this reacts to this guy, more or less. This reacts to this guy, more or less. And what I am looking for, even this guy reacts to this guy. So let's just like refine that a little bit more, make it bigger for people to see. This is a reaction that forms a new high. So this is the place I'm looking to break. So this will be my breaker. Because when this breaks, I get my confirmation trigger that what? Demand has failed. But I'm only willing to take this when I know that the odds are heavily in my favor that this is likely to be what? The London high of day. Because I know when Asia sweeps London, when London sweeps Asia, based on, let's get it up again, here in the bearish scenario, there is an 85% chance that it's Asia or London. London has taken out Asia. So now I know it can't be Asia. So now I know there's an 85% chance by the time I get to New York that it would be London. I'm not going to wait to New York to get that confirmation if I can identify it by hour and see that this happens at what time. 8 o'clock, London open, which is in line with when I'd expect it to happen. 8 o'clock, London open. So, with that being said, I've identified this. I know what this is now. And like I said, if I remove this, what am I trying to do on a daily basis? Mr. Greedy over here. I want to get in as close to this as possible, cover the high, like so, and ride the daily candle all the way down to here. Because this is the best day trade. Nobody can tell me they got the better day trade than me. This is the best one. You can enter here all you like. I got the best one. This is what I want. If I'm a reversal trader, this is what I want. This is the best reversal. This is the only reversal. Because there's two extremes in every given daily candle. One here, one here. You're not going to take this shitty reversal after the whole entire day is over unless you have a reason to hedge. This is the best one. This is the high probability one. So, back to the breaker entry. So, looking for chalk in the box. Shit. Okay, 5M, boom, boom. Now, this is my confirmation trigger, like I said before. So, you could take it like this and put a limit, but then more often than not, you'll get left behind if it breaks the momentum and doesn't come back. So, why am I being greedy if I know this is the high of the daily candle? Why am I being greedy if the risk reward is still worth it if I took it here? This is why I have my breaker model, because all I'm looking for to get in at that point is just this to break. This, looking for this limit order entry shit, is just me being greedy if the risk reward is already ready. So, that being said, in this scenario, what did we have? If I put a momentum entry like this, I have a 17 pip stop. Now, a lot of you would be like, oh my God, that's huge. Like, well, relatively speaking, is it? Let me put things into perspective for you. Give me 1 second. Oh, for God's sake. What am I looking for? Momentum entry. Boom. Make that clear for people to see. And I'll put it over there. Right. So 17 pip stop. A lot of people will say, I'm being greedy. Well, am I like, that's huge, whatever. Well, huge relative to what? Look here. 80% chance or 85% chance this is high. So I already know I've got a good stop loss. Like, so this is going to be a high strike rate setup. Because I'm anticipating that I have a bearish day anyway, especially considering how this price action moved so overextended. It's likely we're going to take this out, especially given all of these equal lows and shit. Like I said, liquidity zone after liquidity zone after liquidity zone. I'm looking to what? Trade towards the money. So that being said, my Asian range, 20 pips, 4 standard deviations. So if I wanted to be really strict, I'll do it from here, but I'm lazy right now, so I'm just going to do 1, 2, 3, 4, right? So I'm expecting this as a daily target, which I can say, okay, if for whatever reason I thought that we could go long, which I'm not because I have the high time frame narrative at play, but if I did, then I would say, okay, potentially long here, so it makes sense to get out. But like I said, I know all of this beforehand. So when I'm trying to make this decision, a 17 pip stop relative to a 4-hour target, it's still a good trade. So is a 17 pip stop really big? No, because it's a 4-hour target with an 80% chance of holding. Why would I not take this trade at the right POI along with a high time frame narrative? And more importantly, back to my previous point, I'm trying to get the weekly move. I know relative to a bearish candle, a bearish weekly candle, looking at this, if you add these two percentages up, you basically get a 70% chance basically every year, 70 to 80% chance every year that the high of the week will be on Monday or Tuesday. Monday has just been swept. Monday's high has just been swept by Tuesday. So now I know that this has like a 70% chance of being the weekly high. So like I said, once again, relatively speaking, it's a 17 pip stop. But what is my target? For the day, I'm looking for 4R. So on that basis alone, it isn't stupid because it's a 4R trade. Like, don't be greedy and think you're going to hit these 20R trades a day because some dickhead told you so. It's not going to happen. So at the end of the day, I'm looking, relatively speaking, 4R for the day, that's good. But I'm trying to get the weekly move, right? So if I'm trying to get the weekly move, if I've identified the weekly high, I can also figure out, if I have the data for the weekly range, where the weekly low is likely to be. This is what this is. October, EU. Worst case scenario that we've seen over the last 8 years, on average week, 118. I want to get like the next one, maybe 120, 130, maybe 160. But worst case, 118. Where is 118? Let's find out. This is me being conservative. 118 over here. What's that in line with? Trading towards the money. What is that in terms of R? 5.8 R. 17 pip stop doesn't look so stupid now, does it? Furthermore, I know all of this before I've even made this decision. Does that make sense? So then when potentially saying, oh, maybe I have a 160 target, why would I say that? Well, if the averages, the law of averages checks out, look what happened last week. This was your low, this was your high. What range was that? That's a 100 pip range. So we under indexed last week. So in terms of the law of averages, if we're expecting the law of averages overall to hit, let's say, the 160 over the last 8 years, and we had an average week, the last week in October, and then the other week in October, this is October, right? Yeah. How big was this range? This went from here to here, 144. So there's an argument to say, perhaps we're either going to get a bigger week because this was so under indexed, or we'll just get something in line with the average, which over 8 years was 160. But if the average was 160 and you got one under 160, another one under 160, there's a high potential that this one would be the big one, because this is the last real week in October that you can get to balance out the averages. So if I'm looking at the biggest weekly average that we've seen in October, which is 182, 228, but maybe that's an anomaly. But keep in mind, it's a recent price action. So even if I was to say 230, for example, where would 230 take me to? This is how I'm thinking in terms of like rationally when trying to figure out targets. I'm like, oh, okay, 230 would be here. Right. And what does that lead to? This being taken out, trading towards the money. That could make sense. So then I ask myself again, does a 17 pip target, so 17 pip stop loss sound stupid relative to me trading for the weekly move? It's a 12-hour trade now. It's not so stupid. I'd rather just be in. Having all this high time frame and all these confluences in my favor. Does that make sense? So my breaker, I only take a breaker seriously when I know that there's an 85% chance that I've identified a stop that I won't get stopped out. I'm not willing to take a breaker if it's Asia here, because my odds aren't that high. This is a slam dunk odd type of setup. Asia being the high is like 40-something%. I'm not taking a breaker on a 40% shot. I'll only play a breaker when it's a low down liquidity type of setup. If it's not this, I'm not taking this. So that covers that. We've barely got any time left. So let me cover how I took this trade, because this is the trade that everyone saw me take and why I took it and blah, blah, blah. And then we'll conclude this call because technically only have 3 minutes left, but let's just get this done quickly. Right, okay. So why did I take this trade? So Let's clean up the chart. Let's go on a higher time frame to see what's going on. So high time frame chalk, but more importantly, I need to see what some demand fail. So I need to see supply take control. This is the CPB. For those that don't know, that means catalyst for a pullback. Now, previous New York high, previous New York low. Previous New York low was taken, order flow should be bearish, relatively speaking to this New York high now that we know that supply is in control. This CPB has failed, demand is in control. The last reaction to the CPB was here. This is the formation of where your new supply chain is likely to come from. That is supply and demand in essence, for those who are who don't know supply and demand. Now, ideally, I want this to be some form of liquidity sweep, because like I said, I'm trying to find the local sucker. If I find the local sucker, I will play off the local sucker. I don't really get any of that sweep stuff here. So the only thing that makes it a POI is the fact that it's a CPB that is at a significant structure break, and this is the last point of supply. Once you identify the high of the day, case. Yeah, I need to identify the high of the day. A momentum entry doesn't make sense if you don't have the high of the day as your stop loss. You can't just put it on any random. You can only do it on that setup. You can't do it on the continuation. To answer Jonathan's question. So, okay, back to what I was saying. So, CPB, there's your start of your new supply chain, right? The high of the day in Asia occurred at 6. I don't like playing off this because it doesn't have all my rules. Like, yeah, I get my liquidity sweep and everything else, but I don't get it in my first 3 hours. So I'm not taking this seriously as the high of the day yet. And furthermore, my rule, I do not trade anything while it's in the Asian range. So I'm not looking to do shit until one of these sides is gone. Now, what is this also? So what is this also? This is also a previous day
low. Yeah.
Horizontal ray, previous daily low, right? So going into this day, I keep in mind, I already said I wanted to short from here and I'm bearish for the week. So now I'm looking at this and I'm like, okay, how do I want to play this? Who is in control? Like Blackwatch says, right here, who is in control? So I'm looking and I'm like, right, this has just failed. I'm looking for PTLR. This is my POI. Check. Where is this occurred? The time element isn't ideal, but it's not shit, and I'll explain why. And like this is why this is the main thing that I was trying to address in this call. You need to think in probabilities, right? Now look, what time did this occur? 6 o'clock. So what are the odds of a 6 o'clock bearish short? You can see even in 2023, like this is the hotspot, but then it suddenly jumps up in Asia at 6 o'clock consistently. So 6 o'clock isn't stupid, right? Like if we go back to the previous example, like I said, and we had the calculator out. Oh, okay, let me just do it for the people. Bearish scenario. What? 43.19%. Let's just do it. Where's my calculator? So we know really the hotspot hours are the last hour of Asia and the first 3. So let's do it. Why not? So let's use this one. What did I say it was? 43.19, right? 13.91. Oh shit, wrong way. 13.91. 8.77. 7.95. What's this? 4.64. 35.27. I'm dividing that by what? 43.19. Shit, where am I calculating from? 43.19. 43.19. 82% chance that, okay, if I include this hour along with the other three that I've ruled out, that if I am going to see a higher day, there's an 80% chance it's going to be here. Because I don't take small hours seriously, like I said. So I'm going into this and I'm looking at it, I'm like, okay, it's not crazy, it's not ideal, but it's not crazy for me to see it here. But I'm still not willing to go, like, I've got nothing to do. Like I said, I don't trade anything in the Asian range. So what do I see here? I'm trying to play a potential reversal setup, right? So I have this here. What do I need to see? I need to see chalk in the box. I have every single other confluence I would need for it to be Asia, apart from the ideal hours part. So I'm careful, simple as that. I didn't enter anything yet. I'm taking my time. I'm not in a rush. Because it doesn't, I'm letting price dictate what I do. Like I'm letting the data tell the story. I'm not letting it write the story. Key point here. So what am I waiting for? I've seen my chalk. Either I take this as my chalk, I take this as my chalk, whatever you want. Chalk, chalk, chalk. Doesn't matter, right? This is your chalk, or this is your chalk. Doesn't matter. I need to see this demand chain fail. I need to know that if I'm going to short, supply is in control. This is your reaction to this guy. This is your last reaction, basically, because there's nothing else. So this is my breaker. The first three, all of that summertime stuff, there's a formula in the back that adjusts for it. So you don't have to worry about that. I've already accounted for all that stuff. So back to the point. So we have our breaker like I want. Now, I'm trying to find what? The local sucker. Where is he? Here he is, right here. Why is he the local sucker? I will tell you. Up until this point, demand chain, you're seeing this fail. You want to trade this and you have whatever bullish bias for whatever reason. That's fine, whatever. Up until this point, this looks bullish, right? So Mr. SMC 2-pip stop loss guy is looking to do what? He's looking for a limit like this, and he's trying to go long. Where is the fucking... Like this, right? And he wants to flex on Instagram or whatever that he's going to hit fucking 50R, right? Because he's the top G. Right? Cool. Cool story, bro. I'm going for a previous weekly high, all this other shit. Whatever. Don't care. Yeah. 35R. Drive Lambo. I'm the top G. Then what happens? He gets clapped like a dickhead. So, next. That's good for us. Because why? He is the local sucker. So we use him. Because this is the point where all the local suckers were together in unison. And they were like, we're going to buy this shit. And then it didn't go to plan. Now I'm interested because I've identified the local sucker and I'm going to take advantage of the local sucker. So I'm going to play what? Lowdown continuation, my favorite game. Boom. And I'm in. Nice and simple. And that was my trade. And I forecast where the low is likely to be, like this. 5 standard deviations. 1, 2, 3, 4, 5. That's what I'm looking to get out. Like I did. Boom. Horizontal rate. And this could potentially be a weekly target, whatever you want. Doesn't matter. I'm looking to get out there for a nice what? 15R trade. Cool. Now, this was doing a lot of bullshit, so I partialed roughly around here, and then I had to get in again. I initially thought, where was the potential next local sucker? I thought this could potentially be the local sucker, but it didn't end up being that way. So what did I do? I adapted. I was like, all right, well, let me say this is a leg. New York is happening. I'm expecting what? I've identified this as the high of the day. So I'm expecting what? A New York continuation. PTLR still active. I have liquidity here. My overall target is still there. Optimal exit time for the day is around 6 o'clock, which is what ended up the day concluding, right? The data doesn't lie. Bearish, 6 o'clock. Yeah. So I'm lining up all my confluences. So there's range for me to take this trade, given the fact that I'm still bearish bias. It's still a continuation relative to what I've identified as the daily high. And I'm looking to get out. I wanted this because it was in line with my standard deviation. It didn't happen. But overall, I still let it hold overnight till I got to here. Right? All my charts are in UK time. Yeah, I'm a UK trader. And that was my week. And my week is done. Chilling. Make sense? And those were the entries. No hindsight shit. It was that one, and I entered again here. So that concludes my week and my review of the week. And we are out of time, but overtime, shit. But yeah, that concludes everything. I hope I answered as many questions as I could that came up. I think I covered basically all the issues that we had in the week. Where low down liquidity is relevant, where it's not, where I adapt and I literally just look at the data and then I'm like, okay, what's price saying? What's the data saying? How do I tell the story for me to get involved? This call will be recorded. Let me make sure it is recorded. Shit. Yes, it is recorded. Thank God. That would have been really, really crap if it wasn't. Yeah, so if people that missed it, they can watch it later. It'll be uploaded to the site probably by tomorrow. Maybe tonight, depends on how quickly it renders. It takes about an hour or so. So yeah, this is how I use data for my edge. Yeah, and that's how I entered the trades I got into this week. Okay, so those who have calls, this is kind of like how a call will go. So you guys have an advantage of basically getting a sneak peek, so you guys can be armed with better questions. We'll keep, I think the next call will go over more psychology stuff, because there's one thing to know your edge and etc., and there's another thing to execute it. So I think we should focus more on that sort of stuff. I'll still do my end of day kind of recaps and stuff like that. Yeah, the one-to-ones are all recorded. You'll get the recordings straight after, so you can watch that as many times as you want. The one-to-ones are basically a crash course in how I trade until the real course in February 2024 is live for everyone to have. And I will go into detail in every single concept that regarding the data, how I use the data, every entry model, why it works, the data behind the entry models. Like, it's going to be detailed, but relevant detail, not waffle. Like, I get straight to the point. I don't waste time. The goal is to get people profitable, give them an edge, change lives. That's why I'm doing this. Like I said, those who know me from Phantom, the data was out and I gave it for free a year ago for a year. Now I'm basically teaching my strategy on my terms, doing it my way. That's the reason why we're here. So thank you guys so much for joining this project. And yeah, lots of big things to come. And yeah, we'll catch you guys next time. So peace and love. See you guys soon.